Welcome back to XRP Spotlight, everyone. I hope you're having an amazing day wherever you're watching from. We have a huge story to break down today because some of the biggest players in traditional finance just made a move that has the XRP community paying very close attention. This isn't about rumors, speculation, or anonymous social media posts. This is about real infrastructure, real institutions, and real developments happening right now in the financial world. If you've been wondering whether institutional adoption is actually progressing behind the scenes or whether XRP is becoming more integrated into the broader financial system, today's update is one you won't want to miss. There are several pieces to this story, and when you put them together, they paint a very interesting picture about where things could be heading next for Ripple, XRP, and the digital asset industry as a whole. Before we get started, if you enjoy staying informed about XRP, Ripple, crypto markets, and institutional developments, make sure you hit that like button and subscribe to XRP Spotlight. The crypto space moves fast, and sometimes the biggest developments are happening far away from the daily price charts everyone is watching. Today is a perfect example of that. While many investors are focused on short-term volatility, some major infrastructure announcements have quietly emerged that could have long-term implications. And what's interesting is that these announcements involve some of the largest and most respected names in global finance. So let's dive into exactly what happened and why so many analysts are paying attention. The first major development comes from CME Group, one of the most important financial marketplaces in the world. CME recently announced the launch of 24/7 cryptocurrency futures and options trading, allowing market participants to access regulated crypto derivatives around the clock. According to CME, the new trading model officially went live at the end of May and immediately attracted participation from both retail and institutional traders. During the opening weekend alone, more than 7,200 cryptocurrency futures and options contracts traded, representing approximately $50 million in notional value. CME described the move as a way to bridge the gap between traditional regulated markets and the always-on nature of digital assets. Now, here's where Ripple enters the story. CME confirmed that Ripple Prime is participating as a futures commission merchant supporting the new 24/7 crypto futures and options environment. Ripple Prime President Noel Kimmel stated that institutional investors increasingly require uninterrupted access to regulated crypto derivatives markets, and that Ripple Prime was built specifically to support that type of demand. This is significant because futures commission merchants play a critical role within derivatives markets. They help institutions access exchanges, manage collateral, process transactions, and facilitate settlement functions. In other words, Ripple Prime isn't merely observing what's happening in institutional crypto markets. It is actively participating in the infrastructure layer supporting institutional access. What makes this especially noteworthy is the size and influence of CME Group itself. CME isn't simply another crypto exchange competing for attention. It is one of the world's largest derivatives marketplaces and serves banks, hedge funds, pension funds, asset managers, corporations, and institutional investors across virtually every major asset class. When an organization of that scale expands its crypto offerings and Ripple Prime is included as part of the infrastructure supporting those offerings, it naturally attracts attention from investors who follow institutional adoption trends. This doesn't automatically mean XRP prices will immediately surge, but it does represent another example of Ripple becoming involved in financial infrastructure that extends beyond the traditional crypto ecosystem. Another important point involves the growing institutional interest surrounding XRP-related products. Reuters previously reported on CME's launch of XRP futures, highlighting increasing institutional demand for alternative crypto assets beyond Bitcoin and Ethereum. The introduction of XRP futures was viewed as a significant milestone because regulated derivatives markets often serve as an important bridge between traditional finance and digital assets. Institutions frequently prefer regulated exposure through futures markets before expanding into broader cryptocurrency strategies. That makes developments involving XRP futures worth watching closely as part of the broader adoption narrative. At the same time, Ripple announced another major expansion involving its Rlust stablecoin. According to Ripple, Rlust is now available to institutions in Turkey through new partnerships with Bilira, Bitexen, and Bitlo. Ripple stated that Rlust has experienced significant growth since launching in late 2024, and has reached approximately $1.7 billion in market capitalization. The company described Rlust as an enterprise-grade, compliance-focused stablecoin designed for institutional use cases involving payments, tokenization, and collateral management. Why is Turkey important? That's a question many investors immediately asked after the announcement. The answer comes down to adoption, demand, and market activity. Turkey has consistently ranked among the most active cryptocurrency markets globally. In regions where local currencies experience volatility, demand for stable digital dollar alternatives often increases. Ripple appears to be targeting markets where demand for trusted dollar-backed digital assets already exists. Rather than launching products in areas without meaningful adoption, the company appears focused on expanding into regions where users and institutions already demonstrate strong interest in digital asset solutions. What's interesting about the Rlust expansion is that it complements Ripple's broader strategy. On one side, the company continues building relationships within institutional infrastructure environments such as derivatives markets. On the other side, it is expanding access to stablecoin solutions in active global markets. These are very different segments of finance, yet both relate to Ripple's larger goal of positioning itself within the evolving digital financial ecosystem. Investors often focus exclusively on price charts, but companies typically build long-term adoption through infrastructure, partnerships, regulatory engagement, and product expansion. Another aspect worth discussing is the growing distinction between speculation and utility. One of the ongoing debates within crypto revolves around whether digital assets will ultimately succeed because of speculative demand or because of practical financial utility. Ripple's recent announcements seem to focus heavily on utility. The company is discussing payment solutions, stablecoin applications, institutional access, settlement infrastructure, and financial market integration. Those themes are very different from the hype-driven narratives that often dominate crypto conversations during bull markets. For XRP holders, this creates an interesting situation. Price action may fluctuate dramatically over short periods, but infrastructure developments tend to unfold over much longer timelines. Major financial institutions do not completely redesign systems overnight. Regulatory frameworks evolve gradually. Market adoption often takes years rather than months. As a result, some investors pay close attention to infrastructure announcements because they may provide insight into where financial markets are heading long before price charts fully reflect those changes. Of course, it's important to maintain realistic expectations. Not every partnership announcement translates directly into immediate XRP demand. Not every institutional development guarantees future price appreciation. Financial markets are influenced by countless variables, including macroeconomic conditions, regulation, investor sentiment, liquidity, and broader adoption trends. The reason these developments matter isn't because they guarantee a particular outcome. They matter because they show how Ripple continues positioning itself within areas of finance that involve significant institutional participation and real-world financial activity. Meanwhile, broader crypto markets continue navigating uncertainty. Investors remain focused on inflation data, interest rates, economic growth, and regulatory developments around the world. Digital assets are increasingly becoming part of larger macroeconomic conversations rather than existing in a separate financial universe. That shift alone represents a major evolution from where the industry stood just a few years ago. The involvement of organizations like CME further reinforces that transformation. Crypto is increasingly interacting with mainstream financial infrastructure rather than operating entirely outside of it. One detail many people overlook is that infrastructure developments often attract other infrastructure developments. When large organizations invest resources into supporting a particular market, additional participants frequently follow. Liquidity providers, market makers, custodians, asset managers, and institutional investors often build around existing infrastructure rather than creating entirely new systems from scratch. That's why announcements involving regulated exchanges, stablecoins, and institutional services often receive significant attention from market analysts. As we look ahead, several areas deserve monitoring. First, investors will be watching how CME's 24/7 crypto futures market develops over time. Second, market participants will track Rlust adoption in newly added regions. Third, attention remains focused on regulatory developments that could influence institutional participation across digital asset markets. And finally, many investors will continue monitoring XRP-related financial products as institutional involvement in the asset class evolves. The biggest takeaway from today's story is simple. Ripple continues expanding its presence across multiple layers of financial infrastructure. Through Ripple Prime, the company is participating in institutional derivatives markets. Through Rlust, it is expanding stablecoin access into active global markets. These are different pieces of a larger strategy, and both developments occurred within a relatively short period of time. Whether you're bullish, bearish, or somewhere in between, it's difficult to ignore the fact that Ripple continues making moves that connect digital assets with broader financial systems. And that's why today's headline is so interesting. They just made their move on XRP. Not through speculation, not through hype, through infrastructure, institutional participation, and expansion into real financial markets. As always, let me know your thoughts down below. Do you think the CME development is the bigger story? Or is Rlust's international expansion the more important signal for Ripple's future? Thanks for watching XRP Spotlight, and as always, stay informed, stay focused, and I'll see you in the next video.